Okay, I promised to do some more videos on the volume point of control, and here we are. We're now using it in multiple time frames, and this is how you would use it from a trading perspective. I've got 4 time frames. I've got the 3-minute at the top left, I've got the 5-minute top right, 15-minute down here, and over onto the hourly for the CAD yen. Start with the 3-minute. Let's just open that up full size. Where are we? Well, we're trading around the volume point of control. The histogram, as you can see, is designated in 2 colors, but you can change that in the settings. I have the purple above and the green below, which really gives you a straight line view on where the volume point of control is actually sitting right now, and it's on this dashed line. So at this point, the price action is at price agreement. In other words, we have no bullish or bearish sentiment. It's a tug of war, and currently the 2 teams, if you like to use another analogy, are equally weighted. Now, if the price action breaks away to the upside, the question you've got to ask yourself is, well, where am I looking for it to perhaps break away more easily with less volume required to drive it along? And really, it's up to this level. We've got high volume up to this point, and then the volume falls away quite dramatically, and we get up to this low volume region. So as the price action breaks away from the VPOC, which it will at some point, but it's clearly remaining there for the time being. But if it does break to the upside, the sort of area you'd be looking at, and I appreciate this is quite tight in terms of the number of pips that are currently available. What's interesting now is the market is just trying to break away from this region. And in a similar way to the downside, you've got this attenuation in volume. So as you can see, we're now starting to break down. If we start to move through this area of volume, then the price action should really start to move quite quickly, because there is very little there in terms of volume to act as support to this current price move. So let's just move up onto the 5-minute. We're seeing a similar sort of thing here. Let's open that full size, make it easier on the eye. And the question here is, if this is going to break to the downside, first of all, what is the opportunity for us as traders in terms of whether this is going to have some momentum, and how much is there in terms of volume that is likely to come into play from a support perspective? Now we're looking at the move to the downside. Well, clearly through this region here, we've got a couple of low volume nodes here, which is nice. So from, where are we, 34 down to 27, so 6 or 7 pips, or 8 pips, whatever it is, the price action should move through there pretty rapidly, because there's very little in the way of volume to give it any support at all. Then it starts to build again down to this high volume area down here. So as we move away through 30 down to 28 and on down to this region here, this is perhaps where it's going to struggle a bit more. But if it gets through this level, happy days, because we've got low volume down here and all the way down to the bottom. And that is the way to look at this indicator. It's giving you a view on where the price action is going to find support or resistance. In other words, it's not going to move smoothly. It's going to probably move into a congestion phase. And if it does, how far is that from any particular point that we might consider entering the market? In other words, is it going to deliver something of meaningful return for us in terms of what we're putting on the table? So if we're prepared to risk, I don't know, let's say 5 pips, is it going to deliver 10 pips or 15 pips for us? Is that enough for us? And that is purely looking at this through the prism of the volume point of control. Now, if we go down to the 15-minute chart, again, we've got a similar picture here, but very different in terms of the volume profile above and below. The volume to the upside here, you can see, is very lightweight, very low, and falls away dramatically up here. And yet to the downside, it's pretty much consistent right the way throughout this phase of price action down to 86.08. So in terms of a bearish move, this is going to have much more significant in terms of volume driving it to the downside than it would do if it were moving to the upside, because we have a much lower concentration of volume right the way throughout pretty much the entire move. Really, once we get through this region, we've got an extensive move here of 20 pips almost, probably a bit more than that, where there is very little in the way of volume, which is going to cause any issues to a move to the upside. But again, we're around the volume point of control here, and we're waiting for this market to break. And of course, we'd have our volume price analysis methodology at the bottom of the chart. I've taken it off here just to make it easier on the eye, so it's not quite so cramped in the screen. But of course, we'd have that to confirm any move away, and whether that was a move of a true move, in other words, genuinely supported with the market makers or the big operators, or it was actually a trap fake move. Now, if we move down onto the hourly, exactly the same principles apply. What we're seeing here is a different picture in terms of where the volume point of control is. We're a long way from it. You can see it sat here up at 86.97. You can see all the concentration of volume. Now, if this is going to break to the upside here, this should move through here fairly easily. But from a longer term perspective, if you were looking at this hourly chart from a longer term perspective, and we're at let's say 86.40, we've got to go to 86 up to 87, so 60 pips of value in here. Now, when this particular pair returns to this particular level here, there is one thing I can guarantee you, is that it will congest, because it is for two reasons. Firstly, because the price action is arriving at a significant point on this chart. In other words, the volume point of control. But secondly, and more importantly, the fact that we are on an hourly chart gives much greater weight, because, as we always say, on every chart, time carries weight. Because if you think about it, within this hourly, if you have an area of congestion on an hourly chart, there is a huge amount of volume in here, 10, 15, 20, 30 times more than you would have on the equivalent volume point of control for a 5-minute or a 10-minute or a 15-minute or a 20-minute, whatever it may be. So time, as we always say, trumps everything. So the slower your time frame is in your particular trading window, if you've got 3 or 4 charts that you're looking at, the slowest time frame will always be the most significant. And here it is the hourly chart. And as I say, all I can guarantee you is that once this price breaks that away from here, once we come back up to the upside, assuming, of course, we don't congest here for a long time, in which case the volume point of control move down here. But let's assume this market breaks to the upside. The journey it's got is really easy to interpret, because the volume falls away here. So from 40 through to 70, volume is decreasing on the histogram, which is great, which means the path of travel is easier for the price, gets through here. But once it starts to hit 80 and beyond, then it is going to start struggling, because it is running into much heavier volume up here. And indeed, as you get to the VPOC itself, then you can expect, and I can guarantee you will get congestion at that point. Because there are so many orders sitting there, there are so many orders waiting to be executed. That is what's happening at these areas, and that's why the price is going to congest there. But also, as I said in the previous video, because it's been a significant level in the past, why would it not be an important level for the market in the future? So that's how to use the VPOC in multiple time frames. We'll take a look at some more examples on some other markets. So I hope you've enjoyed this particular one. Thanks for watching. See you again soon, and bye for now.